Welcome back to my channel. Today I'm going to review the router protocol. For those who are unfamiliar with my channel, what I do is I do research, I feed it into a model, the model has an output, and then I weigh that output to reality. I reflect and modify the model to be more accurate to higher ROI opportunities in the cryptocurrency space. This is the model, the project is router. I'm going to get right into it. So what they want to do is bridge cross-chain communication between L1s and L2s. As a medium of value transfer, they're going to use stablecoins. So they're going to use stablecoins in their environment to allow for value transfers between these systems. But also, they'll allow arbitrary messaging so that you can have composability of DeFi. And one way to think about this is when you use an L1 or an L2, even though the L2 is built on the L1, the experience is exactly as if you move to another system entirely. Well, that's not going to work. Like having all these chains communicate like this doesn't work. Like when we say there's a multi-chain future, we cannot expect them all to communicate like this in this mesh network type of situation, because this guy has to code for this one, this one, this one, and this one. And then if there's someone else, it has to code for that one. So that's not going to work. We're going to need someone who's going to just build one space that allows for everyone to connect to, and that's what their goal is to do here. So that everybody can come here, and then these guys could just port in. And so that way, if they build a toolkit to allow this one to connect in this one, and this one, and this one, you can come up with a common framework here, and then people can get a universal experience, and then the servicing background doesn't have to go to this one, this one, this one, this one, this one. It can just have one connection. That makes it easier for this one, and that makes it easier for them. So that is the basis. So like if we read it, well, you could just see it from the graph. I don't want to read it. That'll take too much of the video. All right. So as far as, so it's a mediation protocol. It's like like anytime there's two entities working together, it's a protocol that'll allow for these guys to interact. If you have a common framework here, once again, it just allows for people to it allows these guys to do less work. This protocol has to do its work to make it universal standards. And then there's these guys. So that's basically the gist of what Router will do. It brings the best options to users while handling the back-end complexity. Seamless user experience, that's going to be important for the adoption of blockchain in the future. Atomic swaps, they said, will be available eventually. Okay, so one definitional thing to notice here is cross-chain versus multi-chain. Cross-chain improves connections between blockchains through seamless communication. It sits between the chains. That's what this one is. This one sits between chains. Multi-chain requires projects to exist on chains of operations. So it sits on chains. So that this is like, this one has to have a platform for a Polygon. It has to have a platform for Bcash, and then it has to have a platform for Ethereum. So that's the difference between cross-chain. Vitalik supported this one, and that would be the Polkadot model, which I also think has a future. But I also think cross-chain definitely has a good. I think this idea is going to be relevant, definitely in the way things operate. So there are security things to think about. Like that could create security vulnerabilities, like a target. Like if all these projects are porting into one thing, that means that they better be good at their security, because there's potentially a big honeypot sitting there. So that's something to consider. Obviously, that's like as blockchains become seamless, if there becomes too big of a honeypot, crackers are everywhere. So they need to know what they're doing. This approach is more secure because if there's a weakness here, and it's a web of a mesh, there's a weakness here, it's only a weakness along this line. And, there might be some systemic weakness, but it's reduced. So that's some of the concerns Vitalik mentioned, etc. So, the things to think about. All right, I'll dive right into the model now. So model expects future increase in demand for the token. Price FOMO expected. It is early with social media, which means that it's not a well-known project as of when this video was made. Major upcoming events, it does have a good roadmap. The roadmap shows Q1 within the next 3/4 of a year. The router V2 chain will launch. That is the blockchain that will manage this Mediation Protocol, and it will host the infrastructure. They are going to connect Algorand, Solana, and they're also going to have IBC for Cosmos. That's a big one. Cosmos ecosystem is important, especially IBC. So that'll bring in a lot of traffic as well. So the roadmap looks good. Regarding Tokenmodel, token is used for governance. It's used for revenue sharing to validators and liquidity providers. It has a concession ratio. So they give you concession ratios and discounts for the fees if you pay in the route token. It's also used for cross-talking fees. So the token is a relevant component. It is control of the protocol. It is ownership of the protocol. And that brings us to the dividend irrelevancy. It will move to PDEs of the traffic across the network. So that's a good model for a protocol because it gives you entitlement ownership, entitlement to revenues. So that's what we want to see. We want to see that a token is entitled to revenues that move across it. And that means that distribution doesn't matter that much because it doesn't matter. You're going to get the same percentage of the value that moves across it as whether if you own 1% or 50% of tokens, you're going to still get a cut of those income. And low inflation rate, like I said, doesn't matter. And a lot of the tokens are issued, almost half. The market cap is 26 million at the beginning of this video, diluted 80 million roughly. Price $3.30 at the making of the video, so it is a low market cap. I couldn't find a lot of details on the ICO, so that could be a little bit risky. I couldn't find any details. But it is a low market cap. It has no price change over the past year, whereas the market has fallen 30% for cryptos in a general sense. So it's outperformed the average crypto, which is good. And it's not experiencing any price FOMO at the making of the video, so that is good. Okay, tokens on the sell side decreased. Expect that to be the case. Money moving need. So these are just the bullish components. Okay, so regarding the governance, it is not decentralized right now. A lot of tokens are pretty concentrated, and it still requires the team to deliver in order for it to succeed. So that's what I mean by low distribution. But it has a good governance design for when it launches. And it gets more validators and it gets more traction and the tokens get released over time. It does have a good governance model. So I put that it is good for now. The governance will be good as it's good and it's in a good position to make that transition. It's centralized and controlled, but designed well for the process transition. So that's what that means. Well, that's just going to be the process, is as the tokens release, as it develops, as it releases its blockchain, and as they sell tokens, etc., it will become more decentralized over time. The governance and, let's just get into the team. So, Ramani Ramachandran is the CEO. He came from the traditional pre-IPO market making for Airbnb, Alibaba, etc., allowing for exit liquidity for founders before the IPO process. So he's got some experience in these equities, in these environments, in all of these things. And, he's got experience in the relevant fields. But I didn't put any extreme achievements like billion-dollar startups, major inventions, or 1 million customers. But, he has experience, so I could put that as green, possibly. Major backers are Coinbase, Polygon, and Alameda Research. So it's got pretty good backers. That also contributes to the validity of the team. All right, so because of the governance and because of the token design and all those things, I expect high-value upgrades in the future, developer motivation to be accurate because they'll have budgets and they'll have all that stuff, as well as revenue sharing. The governance components will have a treasury as well as the validators making decisions, etc. And the developer experience, standard libraries, all those things should be good for their software development kits, etc. So all of these things I expect to be the case because of the token design. It will have a moat. if this thing gets adoption, I do expect that if it gets adoption, it will have a moat because people will build applications and it will connect to everything, and the ecosystem will have a flywheel effect if it's successful. So these are good things about the model. Is that it will have stickiness, it will have staying power if they win in the market. So head-to-head comparisons. They compared NVIDIA Stargate Protocol is one of their competitors. It is not developed as much. Also, it only has 13% of its tokens issued, so they're more of a robbery from their investors because they got a bigger cap than this. They got 53 million, but only 10% of the supply. This one's got almost half the supply released, so this one's more generous to its investors. Also, Stargate is multi-chain solution, not a cross-chain. As I said, this one sits between. Stargate will be more difficult because it will sit on those chains, so it has to be put on those chains. Vitalik also states cross-chain is risky, so that's why I put it as yellow. But there's some I might be disagreeing with him on some level, but also I think that each architecture will find market niche. So network effect, I expect that to be a potentiality for them, and tokens per person to be good. There are some competition in this space for this mediation layer. I expect the user experience to be good. That is going to be their target market, is making the user experience good, and value services to increase. I do think that business models will want to own it. They may use it for the discount of their business model. So if business models are operating through this protocol in the future, they'll want to know their future expenses. So they'll buy the token for that 50% discount, as well as if they want to do the typical things like governance, etc. All right, the value of the target market. We're talking about Web3 infrastructure, seamless user experience of dApps, access to chains. So blockchain's going to move to $400 trillion market cap in the future, like all the blockchains. They're going to eat the world. Software is going to eat the world. Artificial intelligence, blockchain is part of that. It's going to eat everything. All equities, all assets will move in the blockchain. So 400 trillion is the market. Infrastructure is one of my favorite plays because it sits right there in between. So hopefully, as the analogy goes, you want to own the pickaxe store in the gold rush. You don't want to try to find the land. You don't want to find the gold. You want to be a pickaxe salesman because that one's most guaranteed, risk adjusted. All right. And that's why I like infrastructure. All right. So final summary of this project. Low market cap with accomplished CEO. I put no. But this one could be hazy because he's done some interesting stuff with the pre-IPO exits, so he has some experience. So it could be green in that sense. So he's got interesting experience from that, and seeing these startups, he probably has experience seeing that as well. So that could be green. Having all three of these green is a big deal. Okay, so early social media, I put yes, and live niche yes. Pros and cons: infrastructure type investment, small market cap, better token model than a lot of its competition. Roadmap is bullish, especially because they're going to integrate with Cosmos and have their own chain soon, and I think that'll be good. So they have all this good market fit, etc. Cons: they do have competition, and also Vitalik's comments. So that's the cons I could find. And let's see, maybe the cons could be that they haven't delivered all these things yet, but, that's what most investments are. But they, depending on how fast they deliver. There is one last section here that I almost missed. All right, they don't have a lot of liquidity depth, only 36,000 to move at 2%. Exponential growth of adoption. So it's got 9 supported chains. It's got 46,000 transactions total, as its application is Voyager. So at current numbers, at a 1% fee, it should have a market cap of 72 million. So it is somewhat undervalued, which is rare in crypto. Usually things are way overvalued. So this one's undervalued. And because it has roughly 1.5 million moving across it a day, and that's at a 1% fee. We'd expect this revenue with the 20 PDE would make it 72 million market cap. It connects with Ethereum, Binance, Phantom, Polygon, Avalanche, Arbitrum, Optimism, and Kronos as of right now. But now one security risk is there's 3 active validators, and I don't like that. They need to have more. So that should definitely change in the future. And so it is currently serving a niche. Okay, so that's just that last little component I almost missed there. All right, I think that's everything. All right, next section I'm going to do is my patron exclusive actions, what I do personally, and my final assessments on what I think about this. So if you like this kind of unbiased content, please like and subscribe. The goal of this is to correlate to highest ROI possible in the cryptocurrency space, and I'll see you guys later.